Welcome to all those joining and watching this video, and to all the live people in the audience. Please post your questions in the chat, and I'll answer the questions as we come to them. And let's jump right into this. Maybe a little shorter today than typically, but here's why you want to pay attention and listen to what we're about to talk about today around real estate and investing. Before I get started, this is not legal or financial advice. It's simply sharing what we do and hoping to help others become more familiar and be able to advance to your next level in apartment investing, in real estate investing, and other investment asset classes as well, like construction and other things, other asset classes too. But we'll focus around commercial real estate. And so let's jump right in and take a look at multifamily investments from the Eagle City Multifamily Group. And what I want to talk about is how the apartment market is doing, right? It's shifting. We went from low interest rates to high interest rates. And now a lot of purchasers that bought apartments at these big, at the bridge loans, where they're like a 1 or 2 year, maybe interest-free bridge loan, or maybe maturing in 2 to 3 years. A lot of those loans are coming due in the next few months to a year or two from now. And we have access to that list of all the apartments purchased in the last couple years, right, in the Texas market or wherever we want to look. And typically we're looking in the Texas market. And so that's very helpful to see loans coming due, to see of potential sellers. And not everyone wants to sell. A lot of these operators purchase their apartments and they know what they're doing. They have plenty of capital to cover the bridge loan, right? The variable interest rate loans that some of these purchasers acquired. And so the interest rates are high right now, but some of these big operators, they have lots of reserves, lots of capital, and a large, say, portfolio or track record where they're prepared for it. They planned for it, right? And so when the interest rates start going down, they'll be in better shape than some of the apartment purchasers that bought apartments at fixed rates that are higher, right? Because now people tend to be like looking at the interest rate. How can I fix it, right? And if I have a 5, 6, 7, 8, 9% interest rate, whatever it is, right now we have a lot of people out there have this mindset. We want to fix that interest rate, and that's great and everything if you want to fix your interest rate, but for the next 5, 10, or 30 years. But let's consider something. If the interest rates start going down in the next 1, 2, 3 years, some of the people that are well positioned and that have variable interest rates that are prepared to handle the investment, the loan coverage, their interest rates will go down with the market if and when that happens, right? And so some of the big players with long-term experience have better plans in place than some of the beginners and people that purchase and didn't see the market change coming, right? Because the financial market goes in seasons. We're like in winter right now. Interests are high. We want to protect ourselves. We want to cover up and not get cold, right? From the high interest rates, in other words, that hit us, right? Blast us. And the summer is when it's all easier. The interest rates are really low. Deals are coming on the market for a great price. That's like the spring, and then the summer, right? It's easy for everyone to go out in the weather and enjoy, right? And that's the same in markets, and it shifts. And of course, you can find a great deal anytime, right, in specific markets. But generally speaking, typically we see seasons in the financial markets, and the financial markets move. And I'm thinking we're probably in the winter right now, hopefully coming out in the next few months or year or so. I don't know. Who knows when we'll be coming and recovering from that winter, that season, this winter season that it seems like we're in right now, based on all these metrics, based on all the signs that we see, right? And we have to see a lot of news where people have to let go of their properties. In other words, sell it, or you know, some people even lose their property, right? Foreclosed or whatever, but we don't want to go there. That's not a great place to be. And we can prepare ourselves to protect against that kind of deals. And that's what the bottom line focus here at Eagle City Multifamily. We make sure that we have done everything we can to protect our bottom line. Maybe it don't cash flow for a few months. That's okay if the product is rising in value, right? If we'll keep operating efficiently, right? If we have great management in place, that is the place we want to be, right? If there's less cash flow for a time or none, that's okay for a little while. But then when the market comes up, the rents come up, and ultimately the bottom line is, when we sell the asset and we distribute the capital gains, that's when we see the large returns on some of these deals that your partner's in with us. So please reach out to myself, Herb Culp, at ecmultifamily.com. You can call me at 903-951-7552. Call or text me on this number, and I'll be happy to walk you through our process. Find out if you're a great fit, if you're interested in possibly investing in the future. We don't have any open deals currently, but we plan to in the next month or two, or a few months, right? We're looking at lots of deals right now. We're looking at some other asset classes just to compare with the apartment market. For example, mini storage and RV parks, a low maintenance asset class that is typically a lower risk than most other of the real estate investments. And with that, I will wrap this up today, and we'll see you on the next show.